Yeah, so I think that as far as, on China, I remain deeply worried about what's happening on the economic front in China. Because if you look at, the history of economic development, there's only one factor which has been able to predict when a country gets into trouble. We all look for what is it, etc. There's only one consistent factor, which is when a country's debt increases very sharply over a short time horizon. That's the single biggest thing. So there's a whole chapter in the book that I've devoted to it called The Kiss of Debt, which is that
kiss of debt.
Yeah, the kiss of debt. That there's nothing which, that's the one single most important factor. And then you identify as to what is the worrisome level and what happens. So the numbers that we came up with was that when a country's debt as a share of its economy increases by 40 percentage points or more over a 5-year time horizon, there have been 30 such instances in post-war history, 30. In 100% of those instances, that country got into deep economic trouble in the next 5 years, after that 5-year period. China, just to let you know, in the post-crisis world since 2009, as it's tried to keep its economic growth high, has basically taken on more and more debt. In fact, the debt increase over the last 5 years has been 60 percentage points as a share of its economy. This is the largest debt binge that any economy in the world has taken in recorded history, any major economy. And to put this in context of what happened in the United States, at the peak of the US housing bubble in the United States in 2007, it was taking $3 of debt to create $1 of GDP growth in the United States. Usually the two tend to move together, debt and economic growth, because you need debt to sort of grow, and they move together. In China's case, they were both moving together till 2008 in step. Today in China, it's taking $4 of debt to create $1 of GDP growth in China.